If you're still struggling on how to analyze properly, or you don't know how to do a proper top-down analysis, then this video is for you. I'm going to show you how to analyze from your higher time frame down to your lower time frame. So this is EURJPY. I'm going to be honest, I took the screenshot of this trade before it played out, but I think I deleted the screenshot. Analyzed that price was going to break out of the zone, retest and move upward, and exactly what I said happened. Price broke out, retested and moved upward. I'm going to be showing you my reasons and my confluences I saw on this trade that made me say this is a buy setup. When analyzing a trade, the first thing you need to do is to go to your higher time frames, such as your day one or your weekly time frame. But for me, I'm going to be starting from my daily time frame. So this is my day one time frame. What we do on our daily time frame is to look for the trend, because we want to be trading with the trend and not against the trend. So how do you identify a trend? We need to mark out either our higher highs, higher lows, lower highs or lower low. From what you can see, a price kept on forming higher highs and higher lows. Whenever you see the formation of higher highs and formation of higher lows, you know that price is on an uptrend. If you don't know what higher highs and higher lows are, you can go and check one of my previous videos on YouTube and you'll see where I explained everything. With this, we know that price is on an uptrend. Whenever price is on an uptrend, we are supposed to look for buy opportunities. Don't try and force a buy opportunity into the chart. If price is showing a sell opportunity, it's advisable to not trade that sell opportunity. But if price is showing a buy opportunity, then you can easily trade that setup. When I analyze the trade, this part was not formed yet. So I'm going to shift this part out of the screen so we don't get confused. What we do on H4 is we try to mark out our zones, trend line, or whatever strategy you are trading. When you draw your zones on your higher time frame, it makes zones stronger and easier for price to respect than when you draw it on lower time frame. So there's an high at this point, there's a low at this point, another one at this point, and this point. Let's mark that point out. To draw a perfect zone, you need to make sure that this zone is covering your wicks. If there is no wick, make sure that it's at the close of the candlestick. When we draw our zone, this is the lowest low, right? Because the price broke out of this low and got downward. So the next low was an higher low, and higher low. So I knew that price was going to break out of this zone. Definitely. So now we go to our H1. What I'm going to also do in our H1 is to try to adjust the zone smaller so it doesn't get too big for us. So I always say whenever you want to take a trade, make sure you see at least 3 confluences. For this particular trade, the first confluence was our uptrend, the second confluence was our zone, and the third confluence was going to happen only if price break out of the zone, and that is what we call resistance turn support. So if price breaks out of this zone like it did, the resistance zone will become a support zone to push price upward. When price breaks out of the zone, obviously I already have 3 confluences, which means I can start now looking for buy opportunities. Back to our H1 time frame, I want us to now look closely into this part that price started forming. So price got to this zone, price moved downward, it couldn't break out of it. When price finally came back to this zone, made a little bit of rejection here, then finally pushed upward. Look at this point here, price formed an high. Price broke out of that little high upward. Price came back to that zone again to give us entry. When price came back to that point, I would have taken a buy opportunity after looking for my confirmation candlestick. Price moved up again to that level, pushed back down again to the zone again, thereby forming a double bottom on our H1, giving another confluence. If you miss the first entry, you can now take another entry. What I always do before taking any trade is I always look for confirmation candlestick. Most times I look for it on my minute 15 time frame. It gives me confirmation that buyers are now in the market. You can see that a bullish candlestick was now formed at this point, something that looks like an inverted hammer. It means that we can now buy. Now for the stop loss, there are 3 places where you can put your stop loss. There's another block at this point, so your stop loss can be below this other block. Whenever you are putting your stop loss, make sure that you are giving it enough space in case it wants to do a false breakout, so your price doesn't take you out. So for people that are using small accounts, you can put it below where price formed your double bottom, something like this. So when price got to this zone at first, price rejected a little bit before breaking out. The best stop loss if you have a very big account is to put it below that point like this. Price moved upward and retested on that level, then formed a green candlestick before it continued moving upward. If I was going to scale in after taking my initial first entry at this point or at this point here, I would have scaled in again at this point. If I was supposed to take this trade, this is exactly what I would have done from the beginning to the end of this trade. So for my take profits, I marked this top of this high. The reason I use that point as my take profit was because I know that I might get to that point and sell downward. So if this video helped you to understand how to analyze better or how to now properly do your top down analysis, make sure you like this video, share to your friends, and also drop a comment, and don't forget to subscribe to this YouTube channel.